businesses ask the taco question about Iran. That's the headline from the New York Times Deal Book newsletter, and it captures the strange dynamic playing out right now between the White House, the markets, and the Middle East. Andrew Ross Sorkin and the team ask whether the S&P 500 is now dictating U.S. foreign policy. The so-called taco trade, Trump always chickens out, is back in the conversation after the president signaled that U.S. strikes on Iran could wrap up very soon. That comment came Monday, and it sent global markets rallying even as strikes continued and Trump himself warned of more aggressive action if needed. Brent crude, the global oil benchmark, had spiked to nearly $120 a barrel during a rollercoaster session, but by Tuesday morning it was trading around $91. Stocks across Asia and Europe climbed, with airlines, banks, and automakers leading the gains. But the newsletter cautions that the bulls may be getting ahead of themselves. Iran has vowed to keep attacking, essentially paralyzing the Strait of Hormuz. Iraq, Kuwait, Saudi Arabia, and the UAE have cut output by as much as 6.7 million barrels a day, according to Bloomberg sources. That supply crunch is still pushing up costs for households and businesses. Hedge fund giants like Steve Cohen's Point72 and Balyasny Asset Management have already taken heavy hits from the wild swings. The administration is floating a $20 billion government-backed insurance plan for vessels and possible naval escorts to secure the strait. It also temporarily waived some sanctions on Russian oil, and Trump said he had a very good talk with Vladimir Putin. Details remain scarce, and analysts see triple-digit oil prices returning if the bottleneck isn't resolved. That could heap pressure on Trump to de-escalate. Polls show the war is unpopular with voters, and a prolonged energy spike could reignite inflation, delay Federal Reserve rate cuts, and undercut the Republican message on affordability. There's also a separate note that Apple now makes a quarter of its iPhones in India, ramping up production there as part of a broader supply chain shift. But the core story remains the tension between market optimism and geopolitical reality. Thanks for listening. We'll be back soon with more.